Hello, my name is Liberty Model number w84it.
Okay. This is Wait for It with Liberty Trading Club, and you guys asked for it, and now you're gonna get it. You guys been asking Paul, you've been asking Coach B, you've been saying you want more, and now you're gonna get it. So Mondays, Tuesdays, and Thursdays, I'm doing elite training from 12 o'clock to 2 o'clock, and we're gonna dive into the market. We're gonna try to find things that are happening throughout the day, and use that time to really dive deep into it and break down like what I see in the market and what how we can use that to our advantage. I'm not asking you to draw what I've drawn on the chart. So distribution and accumulation. What is distribution and what is accumulation? Big institution buys shares cheap, right? And so let's start at the part where they're already taking profits. Retail starts to sell off, big institution starts to sell off all their shares. And this is where they're taking profits, right? But guess who's buying it? Guess who's buying the risk right now? Retail. Retail is buying the risk. They've FOMO'd into this, and they've been dumping their shares. Retail starts to soak it back up and starts to run it back up by themselves, right? And in this area, because there's a lot of retail trying to catch it right here. Well, they let it run up as high as retail will run it, and then as soon as it gets to its end where it can't go any higher, they short it. Big institutions short it. And so it starts falling, and they're shorting the mess out of it. And it gets all the way down here, and then they start soaking it up. And somewhere in the middle here, I believe it's like at this area right here, big institutions stop shorting it, and retail is FOMOing in, and then they start shorting it. And so if you're noticing a difference here, big institution and retail are always on opposite ends of this spectrum, this move, this wave, And so as big institution is taking profits, retail is taking losses, and they're soaking up the risk that big institution was holding. And then as big institution is shorting, retail's still buying. And then when retail finally catches on and gets tired of losing money, then they start to short, and guess what big institution is doing? Big institution is now soaking up the shorting. And the difference between the two is that big institution has no bottom to their pockets. They have endless pockets, so they can buy up all that retail can short forever and ever and ever. It doesn't matter. It doesn't matter how much we short, because big institution just soaks it all up. And that's what they're not worried about that.